Before you get any ideas, this is not like the last stream. Most streams are not going to be like the last stream, and that is actually cold coffee or iced coffee. And we are back. New week in the market. A green day. QQQ at all-time highs. The S&P 500 only 1% away from all-time highs. It is a very crazy ending to the year. Maybe a little bit of that Santa Claus rally between pretty much our lows from Friday until now. If we go over to lower time frames, if we take a look at this low Friday, I mean, honestly, we can go even lower. If we look at last Thursday until now, we've gone up every single time I sneeze. Every single time I go live, I sneeze. All right, so we've gone up almost 2% since last Thursday, and pulled back a little bit at the end of the day, but pretty much a trend day today, just going up and up and up very slowly. And that could have made it frustrating for people because like it was kind of hard to tell, like especially over here. You know, at this point it was obviously like a breakout, but like in this whole range right over here, it was a little bit confusing. The price action was very choppy, and it looks a lot easier after the fact when you already see what the chart did. But when you're watching this in real time, it can be a little bit tricky. And myself, I messed up on a trade today where I was in calls, and those calls would have went up like 200%, and I ended up stopping out of the calls over here. Okay, well, the price was never there. Let's do this the other way around. I stopped out of it. I probably entered the call somewhere around over here. No, it was much closer over here. Somewhere over here I entered calls, and I actually exited them at a loss over here. And the reason it was a loss was because there was about 2 hours, 3 hours in between the entry and the exit, and they were 0 DTE out of the money. So I was thinking that there would be a quicker move, and we just never got it. So the theta just kept eating at my premiums, and then over here, it kind of seemed like it was breaking down for a little bit to me, and I got I'm not going to say stop hunted because we've talked about that before. I don't want to get into that whole thing, but I got exited out of, I personally decided to exit my position, and I was wrong. Sometimes you're wrong, and watch the market go up. And I did have a little bit of like, oh, should I take another trade? But you really have to fight that feeling of revenge trading. I'd rather just be a little bit frustrated about it for the rest of the day and then just wake up tomorrow and try again. So I didn't end up taking any other trades. I'm just kind of still biting my tongue a little bit, and hopefully don't lose too much sleep over it, and we'll be back tomorrow morning. But nonetheless, there are a lot of technicals to talk about. If you didn't see my message when I notified the stream, I also want to talk about how to capitalize as a trader or an investor, especially on the investor side of things, if you haven't capitalized yet after the gains we've seen in the market in 2023. So that's going to be one of the main topics throughout this stream. I'm going to try and bring up some different approaches. All right, I'm going to try to bring some out of the box type of things onto the stream, talk about some different strategies you can think about going into next year. Not telling you what to do. I really just want you to make money, but I don't really care what you do to make that money as long as you're not taking huge risks. So I'm just going to bring up a variety of different sectors and markets and stuff that we can take a look at throughout the stream to help all of us get ready. I mean, honestly, I did a very good job of switching from swing trading into day trading right around over here, right before that 2022 bear market started. I did a very good job of kind of pulling back on the swing trades after swing trading nonstop during this 2-year rally. Right over here, I was like, okay, I'm done swing trading. And then I started day trading, and that saved me a lot, all right? It saved me a lot in losses because if I would have been swing trading, most swings would have failed in this market. Most stocks went down, okay? Not every stock did what the top 10 stocks did. Most stocks, I mean, some of them even lost 90% of their value in that year or two, especially small caps and mid caps. So I did a very good job of switching day trading, but I'll also admit personally, I did not do a great job of switching back from day trading. And I'm sure a lot of you are on the same boat as me, of switching back from day trading into a market that was, again, beautiful for swing trading, not even just this first rally, but especially after we had a 3-month pullback and then this whole rally. I had not swing traded personally a lot in this rally. Here and there, yes, I've done some stuff and good trades, but there was obviously money left on the table, and I'm sure a lot of you feel the same way. It's not easy to fully catch the gains of a 15% rally in under 2 months. So let's talk about what we can do now without FOMOing into this, because there will be a pullback and probably a decently sized one. All right. We're going to come back to stocks in 5 minutes. Let me just do a quick look at what's going on in other markets. Bitcoin, I'm not a huge fan of this. It did just print a bearish engulfing candle on the daily, and it's making, I mean, the bull flag played out, but I'm going to delete it for right now. It's making a slightly lower high on the daily for the first time in a while, which I'm not a huge fan of. So unless it can break above 45K, starting to flip a little bit short-term bearish on Bitcoin. All right. Moving on to Ethereum, it hit the second target of the swing, almost got to the third as well. And again, it had that bull flag, it played out a little bit. I would say Ethereum looks a little bit better technically because it has that potential hidden bullish divergence. I mean, Bitcoin does, I guess, as well. But what really stands out to me on Ethereum is once again flipping this previous supply from November into a support and also printing a bullish pin bar candle on the daily. So that's really it for crypto. Look at bonds, 10-year continuing to just kind of drop lower and lower. It's not really at any supports right now. It's not oversold currently. Could be more selling to go. It broke under the 618 fib, maybe goes down to 3.6% at the 786 fib. But the US 10-year continuing to attempt to hold 4.3%, even though this kind of looks like a mini descending triangle, which is bearish. But as long as it holds 4.275% is okay, but one little flush under that could take you all the way down to under 4% potentially. So keep that in mind. We're going to come back to this later in the stream, but the Hang Seng Index, a little bit of a gap up today after a rough bearish engulfing candle last Friday, but it did see a bounce at, once again, the bottom of this wedge. Dollar Currency Index, this is pretty interesting now. I just talked about how Bitcoin is starting to look a little bit bearish in the short term, and Bitcoin and the dollar tend to have an inverse correlation. And we've obviously seen Bitcoin in the last 2 months go up quite a bit and the dollar drop quite a bit but now Bitcoin's starting to look bearish, and I would actually say the dollar is starting to look a little bit bullish because you're back at this historical support and you have classic bullish divergence. So keep that in mind. And then another look at gold, retesting the most important level of all time, 2068. I mean, we've been here so many times historically. You're testing it once again as we speak. And this all started with that little wedge breakout. So big test. I personally think that this will break above this level and we will see higher gold prices throughout 2024. That's my prediction. I'm not telling you to go put your life savings into gold, but I do think you've tested it enough times to break out of that level, and then hopefully it flips into a support rather than a resistance. Okay, so that was like the quick overview into other markets. Energy kind of going sideways, financials doing amazing. Actually, financials, we look at the XLF ETF, just back tested this major high from February and flipped it into a support. That is really, really good price action. And now we can actually dive deep into what's going on in the market. So on the daily for the SPY, you are sitting in this range, and pretty much the bottom of your range is 467.76. This red line, the top is about 476, this green line. And you did put in highs of the year earlier today. You did not close above Wednesday's high from last week, and this was your highest close. So you're still in this range. I would say closing above 450, or sorry, we're way above 450. I would say closing above this green line, 476-ish. That would be a breakout of the range, and then closing under 467 and 3/4 will be a breakdown. So you're definitely testing the top of the range. Volume is weak. There is potential classic bearish divergence on the MACD and RSI. I'm going to keep going. On the 4-hour, there's also classic bearish divergence. There's a potential shooting star candle. It doesn't become an actual shooting star candle until you get a little bit of a red candle following it. You have a potential, not super textbook, but close enough, tweezer top on the 1-hour time frame with the classic bearish divergence as well. There are a variety of overbought technicals flashing right now on the SPY, okay? So please keep that in mind. You are also only 1% away. You can't really see it because I made it a black line because it's not really a resistance, but it's just your previous highs. I guess it should turn into a resistance because a lot of people will be looking at it kind of like the self-fulfilling prophecy of technical analysis, where lines become important because other people are looking at the same lines and trading off the same lines. But just keep in mind that we're getting these bearish variables when we're just inches away from previous all-time highs, which is your final resistance on the S&P 500. So something is a little bit weird about this because the momentum tells you that like an all-time high is kind of expected by most people. You don't rally like this if they're not expecting an all-time high. Like, why would people be buying up stocks over here and over here and over here if they didn't think that the market could hit all-time highs relatively soon? Obviously they do. So it's implied in certain ways that we should hit an all-time high. Maybe not this year, but very likely next year. The only question is, if these overbought variables start playing out, what's the chance for that final Hail Mary for the bears is I would say 33% chance that we are just creating the most epic double top of all time. And we are at a very crazy turning point. That's like I'd say there's a 33% chance of the line I just drew happening, and not even to as low as I drew it, but just, in terms of starting to do that. So it's obviously, that's my long way of calling all of this a make or break area, but the oscillators, the candles, the volume, they do say bearish. So keep that in mind. That's why I've been a little bit reluctant on the swings. I did put out a couple of new swings in premium, but they're not as correlated to the S&P 500 as other names. I'm going to leave it at that. And then the QQQ, of course, is at all-time highs, closed at all-time highs, and I'd say it looks technically better than the S&P 500 right here. You are losing volume. You, again, have the potential for the classic bearish divergence on both oscillators. It's already confirmed on the 4-hour, but what did that do? Really not much. This is what I always talk about. You can try and master the MACD and RSI as much as you want, and this is something I learned from Mitre. You have to understand when to use bullish variables and bearish variables, because in a market that's doing this, As much as divergence is one of my favorite indicators, it doesn't really matter, okay? Like at some point it should and it will, and we saw that happen in August where bearish divergence literally reversed the market for 3 months. But like when you're going up 17% in 2 months, I'm not certain that hedge fund managers are like, oh my gosh, there's bearish divergence. There's obviously a lot more going on with higher importance than oscillators. So as much as I love them, you have to be brutally honest, okay? Moving on, the Qs, we have regained. It took us 3 days to regain the one drop we saw last Wednesday. So we pretty much regained it and then broke above it today. So took out the supply from last Wednesday and new highs. So heading into tomorrow, the clear level to watch on the Qs, I'm gonna chart it right here. It's gonna be 410. That's the key level for bulls to defend and for bears to break down. That's your key resistance you got above. We will see whether or not it can hold above it tomorrow. Currently, futures relatively flat, or actually extremely flat. And then finally, the Russell 2000 closed outside of this range. So the Russell 2000 already got a breakout from this trend line over here, right? It already broke out of this a while ago. And it was still in its range. This is its range, right? I'm kind of drawing. And as of today, it broke out of that range. Big outperformance day for small caps and highest close on the Russell 2000 since spring of 2022, and your first ever close above this range. So congratulations, small cap investors or traders. You did get a breakout today on the Russell 2000. As long as you can hold above 200, it looks good. Now keep in mind, pullbacks are normal. It's up 27% off the lows. Maybe it gets a 5 to 10% pullback. Correction can happen. Maybe fill this gap, then re-break out. Don't FOMO, but it is a good breakout. And semis just on an absolute tear. This cup and handle played out beautifully. New all-time high close for the VanEck semi ETF. So good stuff across the board. Let's take a look at the swings. Tesla continuing to test this 260-ish resistance level, but broken out of the wedge. Kind of even back tested it last Wednesday. I'd say it still looks bullish to me. LI had a nice gap up today. It was down about 6% closing last week, and now the swing's only down 2%. Pretty good gap. I think there was some news. It wasn't that big of a move for me to really care about it, but yeah, good gap up here, back above the 200-day moving average. Hidden bullish divergence still in play. Higher low still in play. ARK ETF, this swing. Again, these are all alerted for free in the Discord. The link's on the bottom of your screen, discord.gg/freetradingmovement. ARK ETF is up now 12% since the alert. It's testing these highs from August. It might be actually a little bit higher than them from August of last year. That's really your last resistance until the first target. The first target is just under the $60 level, which was a high from February of 2020. And that's literally your next resistance. All right. Continuing on, Clove. It hit the first target and then it kind of reversed. It's still in profit. It's up 7%, but it was not able to clear the supply over here. So I'm just going to keep that charted. Like I said, gold, I'm looking for an all-time high breakout on spot gold, and this gold stock, Barrick Gold Corporation, doing okay. It's up 5%. Just keep watching what gold does. Carvana, look how beautiful this swing was. Pretty much went up to hit all the targets and then it starts pulling back. Like literally Carvana, the most talked about stock probably in the last 2 months, debatably, went up to my third target, and that's what reversed. Just remember that, okay? Not trying to be egotistical, but come on now. Zoom, nice. Highest close since maybe since the summer. And it's retesting the top of this range it's been in. It's hanging out around the first target. That's pretty much it. So that's really it for the swings. Let me see if anything else really moved today. I want to take a look at Apple just to give an update on it. Looks like that rising wedge is breaking down a little bit. Potential double top here on higher time frames. Anything else? Nvidia, this might be on lower time frames. Take a look at this. So on lower time frames, Nvidia broke out of this bull flag today. Didn't do too much though. That's the 1 hour time frame I just charted. AMD, highest close of its rally. No resistance really until the all-time high retest. Beautiful stuff here. Micron trying to play some catch up, just broke above the $85 level resistance. Google broke out of that diamond to the upside, retesting highs of the year, pretty much around 144. It matches some resistance from April of last year. That's pretty much what's going on in the market. Let's get to the topic for today. So let's say you miss out on this crazy rally throughout the year. Like I said myself, I was doing a lot of day trading. I didn't switch over back to swinging as quick as I should have. And right now, the SPY, I think you need more data to really make a decision, because an all-time high breakout is very good. It is very good, but there were much better entry prices in the last year and in the last 2 months, 3 months especially. So what I would say is this is a straight line up. I don't even really care if it continues to do it and then it patterns over here and I enter at a higher price right now, but I would like to see a pattern before longing names related to the S&P, which in a way is kind of everything. But I'm saying direct correlation, some of its largest holdings. So I'm looking away, I'm looking to the side, all right, in terms of the S&P right now. The QQQ as well, nice all-time high breakout. For select few names that are represented in the Qs, if their technicals line up, it'll be on my checklist, all right? Good example of that is Tesla. It hasn't gone up as much as the Qs have relative to their all-time highs, where the Qs just put in new all-time highs. Tesla's only about halfway back up to all-time highs. These are the types of names I'd be looking for in the QQQ. And then finally, the overall names I would still continue to be looking at. The names I am still putting out swing trades on are the growth stocks, because they heavily outperformed when the market was going up post-COVID crash. I don't think that's going to happen again. I'm not saying they're not going to go up. I'm saying I don't think we're going to see that crazy of a bull market where everything is just basically free money. You're going to have to do a little bit more work than you did last time. But they really did not go back up like the S&P did throughout the year until the last month and a half. So they're just now they're really lagging, right? They went down for longer, they're taking longer to go back up. But once it's like a momentum. Once you start getting that momentum back into those names, like they can move. And there still are some names that just haven't. And then of course there's like the select few small caps that are just absolutely destroyed. I mean, Fisker's a good example of one. You really have to do a lot of fundamental research there because the market has recovered. So when you're looking at a stock that seems very cheap, you need to also fundamentally understand why that stock itself has not recovered. I've talked about a variety of the reasons on Fisker. I might make a video on Fisker to complete my playlist on it, at least for right now, pretty soon. But again, these are the types of names that do look interesting, but once again, pending a pullback. All right, even if we go up a little bit more and then pull back and I still end up entering into some of these names at higher prices than right now, I at least have more technical confirmation. And since you can see where that higher low was put in, I would therefore have a level to create a stop on that swing trade around. But if you were to just FOMO into a rally when something is going straight up, you can't really find a good technical area to place a stop. You're just kind of throwing a dart at a board and probably half the time you'll be right. But if you want to play games where you have 50-50 odds, then Vegas is always open. All right. So those are some of the things I wanted to talk about. Like I also said previously, think about other stuff. Look at emerging markets. We can look at an ETF right now. Look at gold. Gold, like I said, I think this has a really good chance of an all-time high breakout. Chinese stocks, we've been talking about NIO and BABA. CPNG. Go over to the daily. I mean, this name, we really zoom out here. It looks like a larger inverse head and shoulders starting to form. It broke out of this channel. Some of them do need more confirmation. I would say even this needs more confirmation, but think about other markets. Think about markets in which when we were 2 years ago, everything was going up. What really hasn't until now, and then try to find the value in that. Okay. I said we can look at emerging markets ETFs. So let's do this EEM. Like look at something like this. Like there's definitely opportunities you can find. There's names that are still just consolidating and haven't moved. I don't know for sure if this is going to move back up, but like again, the S&P 500 already did this. Even if a name like this only does like this, that's still a really good swing. So there's definitely opportunity around. And then once we do start to pull back, there's going to be some short opportunities. I think there's going to be some beautiful short opportunities in the next couple of weeks. because some names are way too overbought and they're due for a pullback. I don't know if we're quite there just yet. We are testing the top of this consolidation range, and if you break out of a range you just traded for like 2 weeks going into a new year, there's probably a decent chance of it giving you a new move. But once that, even if we break out now and go up a little bit higher, once that's done playing out and we really see an overbought RSI, that could set up a beautiful short setup. So those are some of the things. Just try to think outside the box. Don't just try to funnel into things and pick a random stop and not really manage your risk. You'd rather miss a couple more opportunities and have your risk managed and try to get into every single opportunity. And once the knife actually does come, because it will, you're going to get screwed. If you go and start chasing this rally right now, and I'm not saying the rally's over, but I'm just saying if you go and start chasing it right now, like there's no end to this rally. You are going to be a part of the falling knife, and what's probably going to happen is, like, let's say you enter right here, the market goes up here, and you're only up a few percent, and then we really pull back. Then your stop is going to get hit. And that pullback is probably just going to be like a nice bull flag. You're going to stop out, and then it's going to continue going higher. So that's why you want to wait for this pullback to happen first, okay? Even if it is at higher prices. So what you do not want is to enter a new long and get stopped out on a correction in the market, thinking that, okay, I entered way too late in the market, now we're going to go into a bear market, and then making it even worse. I know I'm spiraling right now. Maybe once that dip happens and you stop out of your long, you're like, okay, it's time for the market to crash, and you go get puts, and the market just rips again. I'm sure that's happened to a lot of bears already this year. It hasn't happened to me because I've mainly been day trading, but what I did lose out on was opportunity costs. I could have made a lot more, and now I'm trying to show you ways to kind of get that feeling of FOMO out of your head and find new ways to enter into a bullish market until it's not. All right. So I just wanted to do a quicker update stream, kind of chat about that a little bit tonight. I'll look at Piton because it's already in the chat, but that's the only ticker I'm going to look at tonight. And then I'll look at more tickers tomorrow night on the stream. Peloton, 662 is the important level to reclaim. It's a nice rounding bottom taking place over here. So it's just important for this to get back above 662. That's the key level. All right. That's going to do it for tonight's stream. If you didn't already, hit the like button, hit the subscribe button. Shout out to everybody in the chat. Who's here? JMKK, appreciate you as well. And make sure you follow the stream if you're on Kick. I'm going to go to the gym now and just try to get my mind a little bit off stocks. I already talked in the beginning of the stream about how I messed up a trade today, so I want to kind of reset for tomorrow so there's no revenge trading and just get back to the process. So that's pretty much the goal. If you didn't see the mastermind we did this weekend, you can go watch the recording, wap.com/championvibe if you want to purchase the recording. If not, you can get the free course or get a free trial to premium on the same exact link. It's the pin chat, wap.com/championvibe. That's the one-stop shop for everything Champion Vibe. All right, have a great night. Good luck trading tomorrow. I'll see you in the Discord in the morning. And that's it.